Yeah, Prof. Wu is a gentleman and someone who doesn't stand on ceremony. That's why we are really glad to have him here. I just like to use the moderator's prerogative to ask the first question before I open it up to the floor. The question goes something like this. I think everyone would have a slightly different response as well as a background to this. The Ministry of Finance, if you look at the FAQ that they have released on their website, the treasury.gov.my, says that a 4% GST, I think the current estimate now is 4%, would actually decrease the inflation rate by 0.1%. I think the argument that the Ministry of Finance uses is that the sales and service tax would be abolished. So that's why, with the introduction of the GST, ironically, prices would actually go down. Or rather, I should say, the inflation rate or the rate in which prices are going up will actually slow down. This is, of course, directly in contrast to what Dr. Lim has mentioned, whereby he said in his paper that inflation would actually increase by 3.89% or 3.9% thereabouts. So I'd like to ask the panelists whether they think that prices would increase, or rather the rate of inflation would increase as a result of GST or not, or whether they believe that the Ministry of Finance projection of a slowing down in the CPI is actually true. I really like to especially ask for Prof. Wu's input on this, given his Chinese experience, to see whether this is something which happened in China or not. To Dr. Lim and perhaps Pei Chi, I'd like to perhaps pose a challenge, which is perhaps prices may increase at a one-shot level early on in the implementation of the GST. But is it possible that this could only be a one-off measure, one-off response, whereby after the initial reaction to the GST, after that, once businesses have gotten used to the GST, that the rate of inflation would slow down? What is your response to this? Perhaps I'd like to start with Prof. Wu, and then we'll move down here before I open up to Q&A.
The introduction of GST in most places of the world is that the inflation rate would go up higher than the base rate over a limited period of time. In other words, it's a one-time jump in the price level rather than an increase in the underlying rate of inflation. So there would be a temporary rise in the inflation rate. Yes. Oh, about coming down, that's a new one. Malaysia boleh. I'm glad to hear.
Well, I think intuitively, if you think that you have something, and then you levy a tax on it, and it increases in price, so intuitively, I think you think prices should increase. So I think that's the first thing. That's quite logically to think about it. Another is, of course, coming on to, in addition to the Chinese experience, is there have been studies done in Canada, of which they estimated that for 1% increase in tax, it leads to more than 1% increase in inflation. So that's the second point. A third point is that Malaysia, of course, has the tools of price controls to control the increase in prices by using hypermarkets to be the price setter. Yes, but if you think about it, if prices for certain goods are always continuously pressed down, who would be producing the goods in the future? Because economically, it's not going to be profitable to spend your time, your money, and your capital to continue to produce the goods, because the government doesn't allow you to increase the price. So that would actually increase the price pressure to cause scarcity in the goods to increase the prices of these goods. So that's more or less the 3 points. So Pei Chi?
Okay, hi. Okay, so our paper estimated that with the implementation of GST at 4%, no, at 7% actually, at 7%, the CPI, which is the official way of calculating inflation in Malaysia, will increase by 3.86%. So that means that, let's say you implement a GST of 1%, on average, inflation will increase at 0.5%. So that's from our calculation. And just to add on to what Professor Wu has mentioned, he said that that when you introduce GST into a country, there will definitely be inflation and it will be one-off. And according to a report by PwC, it stated that yes, the inflation is usually one-off and it will taper off within 12 to 18 months after the introduction of GST. Yeah, thank you.
In my view, I think all in all, the impact will be rather neutral because we will introduce a new tax, a GST, and that will translate into higher prices for some goods and services. But at the same time, that will replace the existing sales and service tax. So that the impact of higher prices because of GST will be offset by the impact of abolition of SST. I think all in all, it will be rather neutral as far as inflation is concerned. However, in the Malaysian context, as I mentioned earlier, there is acute lack of enforcement, and traders, businesses, and manufacturers, they can just raise prices indiscriminately without any punishment. So that will in fact cause the rise in inflation over the years after we implement GST, because they will use this as a justification to raise their prices.
Now, I think the Finance Ministry calculation that GST will actually bring inflation down is a purely mathematical calculation. Now what they're saying is that, we're going to impose GST, but we're going to take away the sales tax. So for businesses, the net effect is, minus 0.1%. Now that's purely maths and purely theoretical, because we know when it comes to human nature, the businessman is going to say, GST is here, I've got 6% extra cost, I'm going to pass it to you. He's not going to mention anything about the sales tax being abolished. And we actually have a clear history of this, because if you recall, during Pak last time as Prime Minister, fuel prices were allowed to fluctuate for a while. And petrol prices first went up, and then when petrol prices went up, a whole slew of costs went up, and I know some transport companies started charging surcharges. But after that, when petrol prices came down, those costs didn't come down. So I think the same thing is going to happen here. They may say they're going to cut the sales tax and then impose the GST. The businesses are going to ignore the fact that the sales tax was removed and use the GST as an excuse to raise prices, and then you're going to get that inflationary spike.
Yeah, I think it's also important to note that if let's say what Chi-Chang says happens, then the arguments that has been made by the Ministry of Finance to say that essential goods and services would be exempt from GST, and hence the lower income people would not be burdened by this, would not be wholly true, since all businesses would take this chance to increase their prices of goods and services. And I'm also reminded by a statistic that the government transformation program came out with during when Tan Sri Kosukun was still minister, whereby when the sugar subsidies were withdrawn slowly, it was they estimated that the price of teh tarik would go up by 0.01 cent or something like that. Obviously, that didn't materialize. We have about 45 minutes for Q&A. I'm sure that all of you have burning questions to ask the panelists and as well as the speakers here in terms of the paper and other issues related to the GST. But when you are, I just have one request. When you're asking the question, please introduce yourself, tell us which organization you're from, and also if you want to direct the question at a certain speaker, please state that person that you want to ask. If not, the question will be addressed generally. Can I have the first set of 3 questions from the audience, please?
I'm I'm Tan Seng Yao, MP for Kepong. Now, this concept of GST was first conceived in Germany in 1918, I think. No, introduced in France in 1954. 59 years from now, in France, the state revenue, 50% comes from GST. Is it possible in Malaysia that one day we'll achieve that with GST? Now, the other countries, such as Canada, I think it's reduced from 5 to 7 to 5%, isn't it, in Canada now? And in Australia, the inflation rate went up. It was in 2000 they introduced it, and inflation rate went up for a brief period, and after that it went down. And everything, including the real estate and all the other parameters of trade and all that, are not affected by the GST. How do you explain that?
Is there someone you want to direct that question?
Oh, never mind. Anybody who wants that.
Thank you.
Thank you. Thank you.
Can I have the next question? Yes, at the back. Okay, that's Taslin, and then a question at the back.
My name is Lau Wing San, assemblyman from Kampong Tunku Selangor. It's not really a question, but I'm a bit attracted to what Professor Wu mentioned just now. It's about the revenue and the dividend by the GLCs. We must, I think this is something that can be shared with our audience here, that there are GLCs who are making money, and these include GLCs which are owned and run by the federal government. In fact, there is actually a treasury circular several years ago. We discovered it in one of the select committee hearing that there are some GSCs owned by the state government of Selangor did not pay up dividends even though they are making money. And they have to, under this circular, pay an annual dividend of 10% to the state government, to whatever government who owns them. This is not strictly followed. I think if this can happen to a state-owned GLCs, it can also happen to any GLCs owned by the federal government. So the problem here is about enforcement, not only the enforcement on how to make people follow all the rules and regulations, but also to make sure that the GLCs pays the dividends diligently, on time, if they're making money, to the state and federal government. This is something that I think Professor Wu has brought up and I think has to be shared by the audience. Thank you.
My name is Dato' Taslim from Jihad for Justice. I mean, don't mistake, huh? It's different jihad. I think it was suggested just now by most of the speakers that if we were to sort of control and cut the excesses in government expenditure, especially in contracts, coming from a background way back in 90s when I'm sure people understand value engineering, value management was something which was introduced, and we found that in a contract, normally we can save anything between 18 to 20%. So looking at the infrastructure expenditure, which runs into billions, that could have, it was done initially for about a year. I remember that in one of the projects which we were involved. But subsequently, that was completely taken off. So I fully agree, but how do we actually get this implemented? I mean, we all know there's an excess is happening. And is there any other way that we could sort of get the expenditures cut? I mean, we know that definitely there's an excess. That's one thing. The other thing, of course, was about these illegal receipts. I mean, we have experienced that in some of the other countries where you want a receipt, this is the price you pay. You don't want a receipt, this is the price you pay. And I think that won't take more than 2 seconds for the Malaysian businesses because they're very, very smart in that. Teh tarik can increase by 20 cents and roti tampal can increase by 40 cents even before they announced. Thank you.
Perhaps I can ask Prof. Wu to answer the question first. And in regards to the illegal receipts, perhaps I'd just like to ask for one further elaboration. You talked about how in China, suddenly markets mushroom for illegal receipts. But at the same time, you also mentioned that government collection from GST actually increase. So, you know, how do you sort of like explain the two? Can it be possible in the Malaysian context that taxes from GST would still raise a lot of revenue, but at the same time there's this flourishing illegal market? And then I'll move on to the other panelists.
One thing for sure, VAT is a very effective instrument in collecting money. So despite the cheating, there is still a big net gain. So in other words, just think of what happens when there's no cheating. There'll be so much money flowing in, the government will have to take on new missions to do. Basically, it does not take much imagination to spend money. It takes more imagination to collect money. So basically, inefficiencies could increase tremendously. And the more worrying thing is, does it mean that the government would use the revenue to push out more of the private sector? If that is true, then we can be sure that the overall efficiency of the economy and the overall growth rate would decline further. The gentleman over there, when he makes his comment about Selangor GLCs not paying their mandated dividends to the state, it's an old story, and I would say that the issue goes more than that. A lot of these GLCs make money because they are given monopoly position in the market by the government. And in return for their monopoly position, they should do their civic duty of turning over to retain profits to the state. So if they are not to turn over retained profits, we should remove the monopoly status and allow the entry of the private sector. So at least we would get a more efficient, a lower price for the products, and also increase our growth rate at the same time. The last gentleman talked about what could be done. I had suggested two specific actions. One is consequences follow from the Auditor General's report every year about possible malfeasance. And the other one is that the way of making government procurements that was started in 1970 has to be revised. Surely the world has changed, and surely we must have thought of better ways to procure government products for the government besides closed and negotiated tenders. So open tender, I think, would be a good idea. At least a larger proportion. I'll just start. Now the proportion of open tender at the federal government is approaching zero. Why don't we move it the other way? I think that would be a step in the right direction.
Without repeating what Professor Wu have said, the role of the GLCs in the Malaysian economy is actually very high, such that would that be a circumstance whereby, yes, GLCs have to turn over the dividends, but in return, they will just increase the price and price on the goods and services on Malaysians because they have the monopolistic power. So is that leading on to a need to break up the GLCs to make them more competitive against each other? That's one issue. So, and then coming back to YB Tan's issue, question about France yielding a lot of GST revenue. So as what Professor said, GST is a very effective way because it taxes consumption. So France is taxing consumption, but we need to note that even taxing consumption at a high, being able to raise lots of revenue from GST or VAT, the French government is still running out of money and has proposed a 70% income tax. And the effect of the imposition of 70% income tax is a lot of rich people from France are leaving France. So Gerard Depardieu has gone to Russia. So imposing high income taxes have an effect of driving away your talent. So in Malaysia, we have to balance it against the two. It's a global hunt for talent. If you impose too high income tax, are you able to attract the right people? If not, how are we going to move to a more innovative, entrepreneurial, technologically driven economy? And the effect of inflation, yes, there will be a one-off, but we have to always consider the sort of the feedback loop. If I incur more costs because prices have increased, I will pass on the cost to another person and to another person to another person. So there will be a circular feedback loop. So such feedback loops can be closed, can be stopped, but it will take some time. And it depends on the level of circulation of goods and services in the country. I will not elaborate more on Dato's issue of how to actually reduce the excesses, because I think Professor Wu has elaborated on it. So I'll let Peiqi respond.
Hi, just to get the question from YB Tan correct. So you said that Canada reduced their GST from 7% to 5% and trade was not impacted. Is that a comment you made? So
Canada is cover oil, so it doesn't need that money as much. So if you can get the South China Sea oil, you cannot give money like in Brunei.
that's one point. And usually, I think GST is not imposed on exports, so it won't impact the trade of the country. It will help the trade. I mean, it doesn't have any impact. So if you reduce the GST, exports still go on as usual. Yeah.
Just wanted to bring up a point in response to Kian Ming's mentioning about and Professor Wu about in China, the fact that there was an illegal market for receipts as well as at the same time collections from taxes actually increased. And this then brings in mind the non-financial implications of GST. Because if we impose it in Malaysia at this point in time, it will be perceived as a very unfair tax, especially if you don't have, on the other side, measures by the federal government to improve expenditure efficiency. And what's going to happen then would be, I can certainly imagine for many, say, middle-class Malaysians who ordinarily would never dream of breaking the law, but if you go for dinner at a restaurant, for example, and the restaurant owner then says, do you need a receipt? If you don't need a receipt, no GST for you. I can imagine many ordinary Malaysians, normally law-abiding Malaysians, would decide that at this point in time, I don't need that receipt, and I don't want to pay the GST because the government is just going to waste the money anyway. And that sets us all on this downward path of, we start breaking one law, and then, where does that end up? Because the culture starts that it's okay to break some laws. And I think that's a consequence that we really have to think deeply about.
Sounds a little bit like the AES. Before we go on to the next round of questions, I'd just like to perhaps do a little bit of clarification. The GST bill is actually in its second reading. It was in the second reading before the 13th general election. It's still stuck in the hall, right?
December 2009. So it's nearly 4 years. Nearly 4 years. It's not up for second reading yet.
Yeah, so it's if let's say I had to take a guess, it would, Dr. Tan, perhaps you can confirm if this is right, that it would probably be passed somewhere at the end of this year, perhaps come up for second reading and then pass at the end of the year during the final sitting so that the implementation process can take place. It will take about anywhere between 14 to 18 months. That's what we've been told, to implement, to put in all the systems, to get all the companies ready for the GST. So perhaps it would not be properly implemented until 2015, but the process has to start around now. Okay, can I open up for the second round of questions? Yes, one question there, one question there. Yes, can you use the mics? that are located closest to you?
It's a general question, but thanks to Kim-Hwa and Pei-Chi for their presentation. I think it's important if we're presenting, say, a critical case on GST and the fact that it is regressive, that we also show a progressive scenario, a progressive taxation scenario. I think that's important. I think Azrul has made one step in terms of the capital gains tax suggestion, but I think it's also important to present the current business as usual case and how that could be modified or replaced with another progressive scenario. The second issue is a general comment. It was indicated earlier on, the presentation was focusing on a 7% rate for GST, but I know some people from perhaps official sources have been batting about a 4% figure. And I think there's going to be a bit of a cat and mouse public relations game about what kind of figure of GST is going to come out. Maybe they'll put 4% out, and they're going to argue the line that this is going to be revenue neutral, and it's going to have like no impact and so forth. But then we get the Singapore situation where GST begins to creep year by year, right? It goes up. It starts. I think it started at 3 or 4%. Now it's about 7%, right? So I think that's an important issue to factor in terms of the case on GST. And I also think, in some ways, the GST is a bit like a lottery. It's like a tax on the mathematically challenged. I think that's why they like to use rates like 7 or 4, which are a bit more tricky to calculate off the cuff. And I think that helps soften it helps GST kind of slip under the radar a bit into our everyday expenditure. But I think the progressive situation needs to be argued more clearly. Yeah.
One more question.
I'm Lee from CIMB. I just want to make some observation before I ask some questions. Recently, I attended the GST committee briefing by the tax division just to correct some perception about the GST impact on inflation. Based on the briefing given by the Dato' Kamaria, the impact of GST on inflation will be higher, one-off impact. It's not lower as what they had published in the website. And they've given us three scenarios, 4%, 5%, and 6%, which the gentleman has pointed out. And basically, the impact will depends on the expenditure pattern of each income group. And I'd like to ask Dr. Lim, when you work out the impact of GST on CPI, how many items you included in your basket? And what's the assumption that you use in terms of zero rated, how many percent exempted, and how many percent are standard rate? So that would differ from what the implication on inflation presented by the Ministry of Finance. And in terms of the revenue impact, I think we were given a set of numbers which include revenue from business and also the household. And the numbers that you pointed out is 7 billion is from household. How would that impact together with the business? Will business save something from GST, given that they need to maintain documentation paper to claim for the rebate, input tax rebate? And to what extent it will pass through to consumer like us in terms of the headline inflation? So my questions to you, to the panelists, is that we know GST is good for the country. The timing is not right, but there's never a good time to implement a tax reform. The question is, if we were to wait for the level of income to increase, what would be the right threshold level for the government to implement GST? 5,000 mean household income? 10,000 mean household income? And look at the current tax structure for Malaysia. We know there's only about 1.9 million people pay tax. And you're looking through all the exemption given to individual household, individual income earner. There are a lot of generous exemption given out. Relief for textbook, relief for computer, relief for how many kids you have. That effectively push out a lot of people from the tax bracket. I agree, over time, we need to widen the income tax band so that I agree with what Azrul said, when you reach a certain level, you're not pushed so fast to the next income tax. But there's something that we need to strike a balance in terms of what we can achieve in the revenue enhancement and what we can do with all the revenue coming in. And I think for a comprehensive tax reform, the government can't just focus on subsidy cut, but also need to look into the expenditure, efficiency of the expenditure. I agree with Professor Dr. Wu, that we need to really go through how to maximize every ringgit that we spend on the expenditure, through all this, minimize the leakages, minimize all the wastage. And then we also look into what Chi-Chang has mentioned in terms of other revenue base. But I think on Azru's proposal to have what I call a capital gain tax on capital market, which that run counter with, in terms of you want to grow your capital market, you need to attract investment. And if you in a country that you have capital gain tax, investor will put more money elsewhere. Why should I put here? So I think we need to balance out. And it's good for the government to finally wake up, realize that we need to do something to fix the budget deficit and the government debt. But at the same time, we need also to balance. I would say, I hope for a budget which is, for growth and fiscal discipline. Yeah. Thank you.